Hello and welcome back to the channel. Today, as you know, introduction to the Elliot Wave Strategy. In this video, we will provide a brief overview of the Elliot Wave theory and how it can be used as a technical analysis tool to predict the market trends. Whether you are a beginner or an experienced trader, this video will give you a clear understanding of the Elliot Wave strategy and how it works. What is the Elliot Wave theory? The Elliot Wave theory is a technical analysis tool that was developed by Ralph Nelson Elliot in the 1930s. The theory is based on the idea that the markets move in a series of predictable patterns, which can be identified and analyzed to make informed trading decisions. According to the Elliot Wave theory, market trends move in a series of 5 waves in the direction of the main trend, followed by a correction of 3 waves. So as you can see on our picture, 1, 2, 3, 4, 5, A, B, C correction. The 5 waves are referred to as impulse waves, while the 3 waves are known as corrective waves. How to apply the Elliot Wave strategy? Well, the best way is going to be to look for these patterns in the price charts, right? So looking for either the 5 waves upside move or downside move and the 3 waves as a correction in the opposite direction. So what we have to look for? We have to first identify the start of the main trend and then look for the 5 wave impulse pattern. So after the 5th wave, we should expect 3 wave correction to occur, which provides an opportunity to either enter the trade or exit the trade. Let's take an example. If the assets, for example shares, are in an uptrend, traders will look for a 5 wave pattern in an uptrend direction, followed by a 3 wave correction in the downward direction. Similarly, if shares are in a downtrend, traders will look for a 5 wave pattern into the downside direction, followed by 3 wave correction to the upside. What are the advantages of the Elliot Wave strategy? One of the main benefits of the Elliot Wave strategy is that it can be used to identify potential market reversals before they occur. And this, of course, can help traders to enter or exit trades at the right time, trying to maximize their profit and trying to minimize their losses. Let's profit run, cut the losses fast. Another advantage of the Elliot Wave strategy is that it can be used in conjunction with other technical analysis tools like moving averages, other oscillators, and working with support and resistance levels to try to confirm trading signals. Unfortunately, the same like with other trading tools, there are some limitations when it comes to the Elliot Wave strategy. It's important to note that the Elliot Wave strategy is not a foolproof or holy grail and requires a significant amount of skill and experience to apply in an effective way. It can be very difficult to identify the correct wave count and to determine when a correction has ended and a new trend has begun. So, well, let's discuss the conclusion. Trying to summarize, the Elliot Wave strategy is a powerful tool for predicting market trends. It is based on the theory that markets move in a predictable patterns, and these patterns can be identified and analyzed to make informed trading decisions. However, it requires a deep understanding of the technical analysis and significant practice to use effectively. If you are new to trading, we recommend that you start by learning the basics of the technical analysis before diving deep into the Elliot Wave strategy. Guys, as usual, please like and subscribe if you haven't already. Please leave the comment below. Wish you great next trading session. See you around, take care and goodbye.